Hello everyone, and welcome to another non-farm payroll webinar here with FXPRIMUS. My name is Stavros Tousios. I'm the market specialist in Limassol. Before we get started today, I would like to let you a few things about FXPRIMUS. FXPRIMUS is globally acclaimed for offering one of the fastest and most secure online trading environments available anywhere in the Forex industry. Our extra measures in safety have positioned us at the front runner in responsible trading, and we are now setting new standards in safety amongst our counterparts in the Forex industry. The company enables clients of all experience levels to trade over 120 instruments, including currency-based commodities, CFDs, and indices. You can discover an award-winning, safe trading environment founded on the proven philosophy of success through security. FXPRIMUS sets the benchmark in safety for its industry-leading safety mechanisms. We were the first to offer client-funded insurance coverage of up to 2.5 million euros per claim and offer third-party monitoring for client withdrawals by boutique client trust. In FXPRIMUS, we are going the extra mile to offer you protection unseen anywhere else in the industry. Now just a little bit about myself, as the usual for any new attendees today. I have traded professionally for over a year and successfully for over 2 or 3 years. And pretty much, I just wanted to take this a step further and being able to provide the knowledge and experience I have to retail traders. And I'm happy to connect with you on Twitter, LinkedIn, or if you have any questions, you can also send me an email on my work email. Before we get started, of course, I would like to read out to you our risk disclaimer. Please note that Forex trading and trading other leveraged products involves a significant level of risk and is not suitable for investors. Trading financial instruments may result in losses as well as profits, and your losses can be greater than your initial invested capital. Before undertaking any such transactions, you should ensure that you fully understand the risks involved in seeking independent advice if necessary. Any opinions, news, research, analysis, prices, or other information contained in this presentation or linked to from this presentation are provided as general market commentary and do not constitute investment advice. FXPRIMUS or its representatives do not accept liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from use of or reliance on such information. So today's agenda, as every single month for this jobs report, we are going to talk about the markets in general. How have they pretty much traded over the past few days? We see the economist's expectations and the votes for these jobs reports. We will see the employment components of the ISM and non-manufacturing ISM as well. We'll see how the market is positioned at the moment, just a few minutes before the NFP, and then of course we will see the arguments between the bad or the pros and cons for deciding whether this is going to be a positive or negative, at least on the fundamental aspect report. Okay, and then of course we will look at the charts and see how can one position himself in order to be able to participate in this event. Okay, so there is nothing else on the slides. Okay, so what I would like to do, of course, is just bring my charts over. This is something usual I would do on a monthly basis. I will close those charts and I will just leave the euro, dollar, and dollar yen up. I will just separate them into two. We have had a very big move down here for some reason. We also have the Forex factory here. Okay, so we can see the results. Now, okay, let's get started. Okay, so the general tone. Okay, what we can do to check what's happening in the markets is pretty much look at the euro and also the dollar rates. Okay, now we have had an expectation for a rise for the US side. Okay, probably in June there's going to be an interest rate rise, so the spread is going to favor the dollar. in this scenario. Okay, we have seen a lot of political uncertainty in Europe. Okay, and that's driven the euro lower, especially over the past few weeks. Okay, if you look at the daily chart, we have had a very big bearish move down here. Okay, and now is some sort of attempt from bears to push price higher after this double bottom. Now, in terms of the ECB, ECB is uncertain about quantitative easing. Okay, and also we have seen, and despite we have seen a lot of tensions between the political risk in Italy, we have seen the US-China trade war, and also other Spanish politics, weighing in. We have seen euro performing quite well over the past 2 days. Okay, on Wednesday actually it moved, okay, higher. This is Wednesday, this green candle, and it moved higher due to risk aversion, pretty much. Okay, and that was because investors started feeling a little bit more impatient, let's say, with the Italian situation. Now, as we see, the pair yesterday was somewhat mixed, and today, as you can see on the charts I have drawn just now, it was just up to now trading within a triangle on the hourly chart. Of course, this was a false break. We had some sort of not effective, not accurate double top here, and price moved back in. Okay, and this is likely to be the case until the NFP comes out. Now on the dollar yen side, okay, over here, that one is down for the week. Okay, let's go on the daily chart to see what's happening. So we have had a double top over here, okay, over here, which is a dynamic support level as well. And since then, we have seen a very big correction on the market. Okay, this correction was caused by Trump's cancellation of the June 12th summit with North Korea. Okay, we still don't know if this is going to happen. This, of course, was followed by demand in safe haven yen, as the political risk also in Europe rose. Okay, now we see that a marginal recovery on dollar. Okay, but obviously activity, is over the past 2 days has been a little bit slow, because everybody is waiting on the jobs report. And my feeling is actually here that this move is purely pricing in the NFP. Okay, so I would be very, very, very careful with what I do with my positioning today. Okay, this is priced in already. People believe already that the NFP will be good, and they started buying. Okay, so you have to be very, very careful. Now, as you've seen, I have pulled my Fibonacci levels here. Okay, on the hourly chart, in both cases, I have drawn a few levels, a triangle here. Actually, we can just delete that because it's invalidated. We can, of course, keep this trend line though, from down here to there. Okay, not that it will tell us anything at the moment. It doesn't actually. So let's delete this too. So I see the price is actually sitting right at 116.7. Okay, so what I want to do is go a little bit lower and check what are the possible levels I have. Okay, so on the euro dollar, you see those are the levels you should be watching at: 116.4, 116.1, and of course the top 117.2. Okay, these are the levels you should be watching. Okay, of course, down here we see over the past hour that there has been considerable good drop, you see, but price is stable now, and it's likely to remain like this for the next 20 minutes. Let me just add my Bollinger Bands here, 25. Let's go on to, yeah, just leave the 25 is okay. So we see some sort of squeeze, but as I said, it's looking like it's priced in already. So we'll have a southern bias over the bottom over here. On the dollar yen side as well, let's go on the hourly, I have drawn a very nice upward channel which just broke. Okay, and again, it seems like dollar is priced in already for a good NFP. My levels are drawn with the Fibonacci, okay, and of course I can draw another good level down here. It's simply the previous low. Okay, let's go back down to the 30 minutes. This is a good level, and of course another good level would be this. Okay, so whether you're looking to if you are looking to take a profit or have that as a stop loss or as an entry, or even this on the channel, it's up to you. Let me just make this a bit smaller and let me add my Bollinger Bands. Oops, 1 second. My Bollinger Bands also on the right side. And there we go. We have a very, very slopey northern Bollinger Band over here, okay? Priced in already. It's a bit worrying for me. Okay, anyway, let's just now have a look at the economist expectations. So economist expectations, there we go, the previous NFP. So the report, the previous one, okay, it came out 26,000 worse than the expectation, see? But we also saw an upward revision from 103 to 135. Okay, I think this month's expectations at 190, let's say, is a little lower than I expect. Okay, just a tiny bit lower than I expect. But I also believe, because if you see all the previous reports since January up to today, the whole have been revised upwards. Okay, upward revision, upward revision, upward revision, upward revision. I feel the 190 is a good expectation, but I believe the markets will maybe come around 200 or something. This is, of course, my view. Okay. Now, don't forget also that the revisions are, and also the conflicts, of course, between unemployment and the average hourly earnings are very, very important. Okay, so there has been in total 77 estimates for this month. Okay, the highest expectation is 250K. The lowest expectation is 150K, which is a standard deviation of plus minus 17,000, and which is down from last month's, because last month we had a 20,000 deviation. Now, the dollar did look strong, okay, ahead of the NFP, and many wonder if this is a correction that, where we are, this correction is going to last any longer, because we really see a very good upward move right now, actually. Now, don't forget that despite the technicals, as I was just mentioning, the average hourly earnings are very important for this wage report, as every single month, of course. All eyes are focused on the hourly earnings, which is likely to stick near 2.6% year on year. Now, the thing is with the average earnings is that the previous one was revised down from 0.3 to 0.2. So economists here on the expectations were a little bit out. Now expectations is 0.2. It's most likely that, it will remain at 0.2. Now, in terms of the unemployment rate, the unemployment rate is at a very, very multi-year low. It's more likely to remain below 4%. Okay, 3.94%. I don't think it will have a big effect on the report anyway. Of course, it will have an effect, but the main one to look at always first is the headline number, and secondly is the average hourly earnings, because they are tied to inflation. Now, if the NFP is good, okay, FOMC most likely will rise rates in June's meeting. If there is shortage in hiring, then we might have a rapid ramp up of the wages, hence higher inflation. But we don't have really evidence on this just yet, okay? At least on the NFP side of things, because given the price of gas, inflation is actually being driven higher. Now, in terms of other employment components, one second. Yeah, I'm back. Apologies for this, just a small technical issue. Now, in terms of other employment reports that we can look, okay, because we do indeed have those three coming out today, but there has been, of course, other reports that have been published throughout the week, throughout the month, that they are very important to look. Now, one of them is the ISM manufacturing, okay, and this has an employment index. That is the same for the ISM non-manufacturing, which also has an employment index. Now, those of them decreased 3.1 and 3% respectively. Another report to look at is the jobless claims. Okay, they came out yesterday, if I'm not mistaken. Unemployment claims, they came out at 221. I don't know why this is green. This is unemployment claims. Oh yes, this is correct. So it came out better than expectations, 220K, only 7K difference. Okay, which is a good one, a good indication for the NFP. Now, the ADP is another one that came out. That was on Wednesday. Yes, there we go. This came out at 178, not much. I wouldn't say much lower from expectations, but it was revised. The previous one was revised downwards, and that was revised downwards quite a bit, nearly 50K, 40K actually. This is a big downward revision. Okay. Now, I won't go into much detail, but there is also the Challenger Gray Challenger report, which is the jobs cut report. Okay. The jobs cut report was, let's just go check on that jobs report, cut Challenger. There we go. From Challenger Gray. Okay, so this is good because the announced jobs for the following month fell. The cut fell 12.6% from 36 to 31, which is very good actually. It's a very good indication as well. Okay. Now, of course, there is some other components that we can look at, and one of them will be the treasury yields, which I have them right here today. The treasury yields are a tiny bit up today. Okay, and when they are higher, this is a good indication for the NFP, which actually we already see that on the charts anyway. Okay, now we can also look into oil. Okay, inflation depends on oil. So when the inflation is up, the interest rates are supposed to go low. Now, oil has fallen over the past few days, and this could be a signal for a good NFP. Okay, as when the inflation falls, hiring accelerates and unemployment falls. Now, generally, oil prices are high right now in general, okay, because they're nearly $67 per barrel. But on the long term, the market just had a major correction, very big correction, just a week ahead of the NFP. Now, so if we just now let's say that we devise a table, with good and bad or pros and cons. So we also can add the where are we? There we go. The consumer sentiment. Okay, this was also higher. Okay, and it was, interestingly enough, revised upwards 20%, which is very good. Now, the jobs cut report, we said they plan to cut 12.6%, which is very good. Dollar index is also a good indication because is how the dollar performs against the basket of other major currencies. Has been down for the last couple of days, but in general, it's very strong. Of the past few weeks, it just managed to drive up, and people who got in managed to get a lot of quite a few pips there. Now, the unemployment claims were also down. Okay, so this is another good indication for a good NFP. Now, the only two components that they are down, it was the ISM and the manufacturing and non-manufacturing employment indexes. In both cases, they went down. And of course, the ADP, which is pretty much the NFP, but it's coming from a different statistical agency. Okay, but they tend to be out on their estimates quite a bit, and the divergence is getting wider and wider. Now, how can one position himself? Okay, my first recommendation would be to never look only at the headline number. Okay, you have 3 reports coming out here, not just one. Okay, now pay attention that there have been 5 different upward revisions over the past few months in 2018, all of them. On average, that's about 15K an average upward revision, which means the economists were always a little bit tight, okay, than the actual results were always a bit short. Now, as long as the NFP is coming bigger than 190 and the hourly earnings above 0.2, we should see a rally towards, I would say, towards 110 on the dollar yen. And if we're talking on the euro dollar side of things, I would say towards 116, towards 116, 116.40, actually, that level here. Okay, if it comes out good. Now, if the opposite happens, then we should be looking somewhere near this top, okay, and this top, above 117. And on the dollar yen, we can look at those levels we just drawn around 109. Okay, 109 should be a very good indication, a very good level, or even lower after a few hours. Now, if the results are mixed, of course, we are going to see whip shows again. The moves may be limited. And technicals might be actually easier to let's say work effectively. Okay. Now I just said that you should always expect this to come higher than 190. Okay. It doesn't necessarily mean that anything above 190 is to be considered as a buy. Okay, that's not the case. The divergence must be large to say, to use this as an indicator. Okay, for example, we should have something at least 230, 240K higher to say to yourself, this is a very positive report. Okay, and then of course this also has to be above 0.2, and the unemployment rate should not fall, should not actually rise to 4%. Now, saying this, I always like to use the 1 hour charts because there is a big move in pips, so anything else would be quite ineffective to look at, or quite small, let's say. You wouldn't be able even to follow the markets properly, And you know, you can identify the points as I have also drawn them here. Now, saying about the time frames, you can of course go lower, go higher. It's really up to you. It's really what makes sense in your eye. But also, saying about times now and time frames, I also recall that as I repeat on every single webinar, that it's always because most of the questions are always when can I get in? What is the best time? Should I trade? No, my opinion is no. If you are new to this, you should not trade. But if you're really keen and really want to do so, one of the safest ways, not safe, the safest ways would be to wait for the markets to settle. Give the markets at least 1 hour after the results are released, and wait for the markets to show you some sort of directional activity. Whether they're going to go up or down is going to be upon the first 20 minutes of the NFP, right? But after this, after the first hour is gone, you will see whether this is going to continue moving higher or lower, or if it's going to reverse, okay? Now, the truth is that most likely, okay, you're seeing a breakout here right now, right? So let's just take this a little bit lower to 20, be a bit more risk, prone to risk, okay? We see a breakout already on dollar yen, okay? Dollar is probably falling in general, yen, I'm sorry, is probably falling as well at the same time. And that's why we see this break, although on the euro we are in consolidation, okay? This is, you know, I must say, this is one of the most volatile NFP, pre-NFP webinars I have done, I can say. It looks very priced in to me, so it's very hard to anticipate anything from these results, okay? Now we have drawn our levels, one here, one down here. Let's see what goes up. Let's draw another one. That's a good level. Okay, and that's towards 110, but of course not 110. Let's close this. Okay, and we can make that a little bit smaller. Now on the euro dollar, we can draw our, okay, this is pretty much the same level up here, so that's the top, and that is a bottom, which is 61.8, but this is just a bit more obvious because I'm using a different point, a different trend line. Okay, so there is 2 minutes left. Now, those levels I draw don't necessarily mean buy, sell, close, or do anything. They're just levels that are probably going to see price getting rejected upon, okay, or even a break. Now, in terms of if you really want to go in, please make sure you are using a stop loss that it actually is appropriate for your account. Okay, and when I say appropriate, I mean don't have a 50 pip stop loss. I mean it's not gonna work. Okay. You see the market is moving already upwards, favoring dollar, but I am expecting a whipsaw. Okay, so the headline number is over 34, 35K above expectations. Wow, this is a very good report actually. Unemployment rate fell to 3.8. This is a multi-year low on the unemployment. And at the same time, more jobs, of course, when this is, this is getting higher, it means that more people are employed, so there is demand for more, right? So the unemployment rate will fall. Now, when the unemployment rate falls, it means that there's more people needed, right? So when people are needed, companies are going to pay more to get skilled people working for them. So the average yearly earnings are going up. It's simple math, not even math. So now, if you look at these lines I draw, it's exactly what price came down to on the euro dollar case and up to on the dollar yen case. Okay, how funny. But don't forget, this was already priced in. Okay, already priced in. We have had a huge move from up there to down here. It's over 60 pips if you take the previous hour in consideration. Okay, and if you take dollar yen, we're talking about 50 pips as well. Now, since the actual results are out, guys, you are of course free to ask any questions. I see a couple of people raising hands. Manish Gupta, please feel free to type your question on the question box. I can see your questions, guys. So the time now is 3:30 in Cyprus. So the best way is to wait, of course, for 4 o'clock to hit. See where this candle is going to end. Okay, where is this going to go? Is this going to end down here, break down here, go all the way back up? We never know. So that's why it's very important that we wait if we want to play it safe. Now the dollar yen is overbought anyway, if you see the RSI, right? So it might be a case where it momentarily breaks this level, creates a false break, and then turns back. It might be a case where this actually breaks all that level and goes higher and higher. Okay. Question is this going to break this level? If this breaks, hold on, if this breaks this level up here, okay, which is 109.8, then we're looking at 110 as well. Okay, and if it breaks that level, it also means that it will invalidate the second leg extension. So, which pretty much means that on the full scale, if you look at it, this is the first wave, this is the second wave, and the third wave. Normally we'll have 2 waves down, and then the market continues back up. Now, the thing is, we never know how long those 2 waves are going to be. So this could be considered as one wave, and then correction and another wave down, up to the golden ratio. Or it could indeed be one wave, and then second wave, and now the market is heading up. Now, this level is the level we should be looking at in the short to medium term price action, okay? If you look at the euro dollar, of course, we are at a complete different point, okay? We are just actually below the RSI 50, which doesn't necessarily mean it's bearish. Anything below 40 and 60 is pretty much mixed, you know. We see the MACD, okay, it has the histogram has a bit of bearishness, but we also see some sort of bullishness coming in play. Both the signal lines and the MACD line are not below the 0 line, so we're still positive, right? And we're just waiting to see what happens. on the euro dollar. If you see, the euro dollar is actually trying to recover its losses, or pretty much people are taking profits now, closing their positions, and the market is moving back up, right? So this is exactly what I call a whip show, and this is exactly the reason I told you should be very careful with this event, because it's already priced in. Okay. I see a few people joining, a few people still in, but I don't see any questions, and it's quite hard for me to think there's no questions. I normally get a lot of people asking different stuff, so guys wondering about anything, or is there anything that you'd like to know now that you have the chance, because you have me here live talking to you. Let's see if there was any sort of revision. Okay, so 164 not revised. It may be revised later on. We can't really expect that to come out at the same time. But this is a very, very, very good report. And it's likely to be revised upward as well, this 164. Good thing is that every single component of this report is actually better than expectations. Okay, now 189 to 223, we're talking about 35,000 divergence. I mean, if it was 40 or 50, if it was 50, it was like 230 or 250, you will see this probably breaking. And there we go, euro dollar is now reversing. Yen seems to be weak. So that is the reason that dollar yen is staying still positive. But euro on the other side is what everybody is buying at the moment after reaching this low, 116.50. Okay, I have a question here. 1 second. Will the market continue being positive, or it will do reverse? Well, as you can see for yourself, the euro dollar is actually reversing right now. Okay, dollar yen seems different because yen is weaker. Okay, so this is likely to remain, I wouldn't say bullish, but it will remain around those levels. Euro dollar might go all the way back up here and even higher. Now, the important thing is that if you look at euro dollar, we had first wave, second wave, third wave, one of consolidation. Okay, normally we should expect price to, I mean, according to technicals, to come a little bit lower than this level. Okay, but this may be just a false indication. If we go back to the triangle I drew before, okay, so we would be here. Okay, if you do that 4 hour, you see, this is just a false one. And it is, of course, a doji candle. Okay, if you look at it on the daily, of course, there's not much you can say, but again, this looks like a doji candle at the end of the day for me at this level, around what price is now, 117 or so. So we can consider this to We can consider this as a fake out as well as this. And this would be 1, 2, 3, A, B, yeah, a break upwards. So to answer your question, we never know whether this is going to reverse or not, or continue higher. But the market shows us, it's simple, what the market shows us is very clear. Okay. Yes, I see hands, but no questions. Edmund, Manish, feel free to type on the box. Edmund, yes, I can see your hand. Please type your question in the box. Let's have a look at a different pair. Let's look at what's happening with gold. Gold is okay, is some sort of reversing as well, but you will see that in general, because yen as a safe haven is a bit weak, gold is also weak. Okay, so it can't really move as fast as euro. It follows euro, but then it can't really follow up completely because the safe haven are a bit weaker. Okay, let's look at the DAX. Okay, DAX reversed, if you see. So our thinking for safe havens being weak is correct. Okay, because we see that the dollar is now reversing. Okay, let's look at the oil. What's happening in the oil? Not much in the oil. Not much in the oil, and that's probably because of the wages report. It was positive. S&P, not much movement. Aussie is moved quite a bit. It's moving along with euro dollar. That should be the same for New Zealandian. Pretty much, just in the smaller scale. Dollar CAD should be, oh, okay. That's good recovery as well on the dollar CAD. On the loonie side, of course. CHF, again, you see, so CHF, which is a safe haven, yen and also gold are a bit weaker. We can see that clearly on the charts. I don't see any more questions, guys. I will give you a few more minutes to ask any questions. So in this case, what we can do is go down the 15-minute, if we want, of course, and check where is price going to retrace to, because we are coming from up there to down here, and we want to see if this is actually going to stop at the golden ratio, 61.8. So if we see this stopping there and reversing, there is likely to be a continuation further down. Okay, but we cannot know that yet. That's why we'll have the Fibonacci's to help us identify where the market is going to head. Okay, so Edmund is asking, since the results are all positive, shouldn't dollar be rising, signaling a sell position? Okay, there is a mix-up here. The results are indeed all positive, okay, and dollar had its move, okay. Dollar didn't even had its move now. It had its move from the previous hour. So it has been going up over the past 75 minutes now. It has been going up, okay, over here. Now, considering the results came out positive, and bears in this case, or bulls on the dollar case, have pushed the price lower up to the first rejection point, means that traders have made their profits for the day. So they're closing the positions now, and we have a reversal in the market. Okay. So this goes against the headline numbers, yes, indeed, but this is why I've been saying that be careful, because the markets are, one, priced in, okay, and second, they had their run anyway. Okay, so this is 30 pips. It's not much, but you know, those 30 pips are quite a bit for a trader to gain just on the NFP. Does this make sense, Edmund? Yes. Okay, expectations are, yes, no worries, Edmund. You're welcome. Expectations from now on are, we wait until the end of the hour and see where the market is heading. Don't forget safe havens, which is yen, gold, and also the Swiss franc. They are weaker than anything else. Okay. I'm not gonna take any more of your time since there is no more questions. I want to thank you for attending another webinar with us. I hope it was helpful for another time. And of course, if you are seeing this webinar recording, don't forget, if you have any questions, my email is just here. Feel free to email me and I will get back to you as soon as I can. Okay? Just make sure your questions are valid. Don't ask me when to buy, when to sell. I'm not going to reply that. Okay? So thank you once again. Pay attention to what's happening in the market, how the markets are reacting to the data. Okay? And take it from there. This is data in a visual way. This is what the markets are doing. They're moving price up and down. Okay, understand it, and it should be easy for you to understand how you can hopefully become successful. Okay, increase your chances of becoming more successful, pretty much. Thank you once again, and have a nice weekend.